She gave a bravura performance that could have been basically spliced into the press conference in Jay Powell's place. And in many ways, I think it was actually perhaps a press conference Jay Powell should have given, because I'll focus in on one specific thing that she said that Jay Powell did not say. When Steve asked her, what would your dot plot show? She said, I would probably have 2 rate increases this year with wide uncertainty bands around it. If you think about it, Kelly, the mystery of the last Fed meeting was why Powell, just a month after saying we're going to have 2 rate increases this year, basically said, we're done. I mean, that's really the way he said it. The way Yellen said it was, well, we still think we might have more to do, but look at all these uncertainties about trade policy, about China, about tightening of financial conditions. There's a wide uncertainty band around it. That's kind of more the sort of gradual move away from a tightening bias that you expect from central banks, not this abrupt move from hawkish to dovish with nothing to explain it in between.
And Michael Farr, that might explain why the markets feel such whiplash. It goes to show the importance of rhetoric maybe in this position, and that Janet Yellen does have a deep knowledge of economics. We've talked about this in the past, and kind of has wonky ways of communicating this stuff. Powell wants to be more straightforward and plain spoken, but perhaps he'll change his tune.
Well, and I think that she was a lot more plain-spoken than we've seen her, certainly when she was Fed chair. She could tend to be a little Greenspan-esque at times and left us scratching our heads. She was very straightforward. I think she gave a great endorsement of what the Fed is doing, how the Fed is doing it, and how Jay Powell is conducting himself. I thought all of that was good. The comment that got me, I guess, was that the comments made about the Fed by the president could threaten the public confidence in the Fed. I thought that was a very important point, because that public confidence in the Fed really pulled us out of the big banking crisis in 2009. It was the stress tests, and it was the messaging from the Fed that reinserted the good faith and credit of the central bank back into the banking system and got us moving again. So it's really important that they do stay independent. What we've heard, though, from her was that things, at least from the Fed's actions and perspective, look like they're on the right track, could continue, and they're going to be sensitive about that balance sheet.
So, Greg, going back to the point you made, and I want to make sure that people caught this, if they missed it, you said that was the press conference that Powell should have given. Now, it is interesting that she's coming out and being, and doing this interview. Of course, she's on the speaking circuit. She works at Brookings. She's out and about. What do you make of that? I mean, people are going to draw the comparison that you just drew. Should she be giving Powell a little bit more leeway?
She wasn't critical of Powell at all. I'm being more critical of Powell right now than Yellen was.
Right. But you're saying that the contrast is so great that it diminishes him.
No, I don't actually. If I left that impression, that's not what I meant to say. The nuance that I'm talking about is not one that broadly makes a big difference in the end. It's more important that Powell get the policy right than that he get the message right. The message will eventually follow. And look, Yellen had a little bit of trouble in her first year. Ben had some, Ben Bernanke before. Every Fed chairman is allowed a couple of sort of like missteps in their first year, and there's nothing fundamentally wrong with the policy that Powell is following right now. What he hasn't yet given is, I think, a good description of the overall framework that determines what he thinks the path for rates should be. I'm still unclear on exactly why he doesn't think that the Fed doesn't need to raise rates any longer. Is it because he's aiming for an inflation overshoot? He wants inflation to be higher than 2%? Is it because he thinks that the economy's underlying growth rate is actually somewhat fragile, the so-called secular stagnation story? Is it because there is, God forbid, a Powell put, and he's hypersensitive about the markets? These are questions I don't think have been adequately answered.